Welcome back, everybody, to Leading Experts. I'm Grayson Foster. If you're just joining us, my guest today is Mr. Kwe-Parker. Mr. Parker is one of the nation's leading FHA and VA mortgage experts. He is a nationally ranked mortgage originator and the executive director of the NSM Rate Department. Okay, so how do people participate in your program to get a rate reduction?
They actually register. That's the first step.
Okay.
You have to know you exist.
Okay.
That's the biggest mistake most people make. And when they get a loan, they assume that if it's a 30-year loan, that those are the terms they're going to endure until they refinance out of it or until, you know, the loan is paid off.
Right.
They should register the loan first. And one of the places they can go to register a loan is rateguardian.com. Just letting us know that they're out there, these are the loans they were given. From that point, we look for ways to lower that interest rate and have a new bank pay all of the fees associated with getting that loan. Mm-hmm. That's where it starts. Okay. It's really nothing involved on the consumer side. It's a lot that goes on behind the curtain in our office.
Right.
But for the consumer, it's that simple. Just registering, it takes less than 2 minutes to register a loan online.
Right. So exactly how fast is that process? As you say, it's a couple of minutes.
Yeah, a couple of minutes to register the loan. You can even call in if you're not on the web. You can even call our office and register your loan. Anyone that monitors FHA loans and sponsors a rate watch should be able to do that for you.
Because I think most people think to themselves, if I have to refinance my loan, I don't want to go through the hassle or a nightmare that's involved with that, but you're saying the complete opposite.
See, that's the key word, is refinance. And frequently, technically, when you do a rate reduction, it is a refinance. Mm-hmm. But in a sense, I wouldn't consider it that because it's not the requalification. They say getting a loan, they almost ask for everything other than DNA.
Right.
You know, your first child.
Exactly.
You don't requalify. There's no appraisal. No one comes and inspects the house. They're not scrutinizing your income or any of that stuff. So to call it a refinance, it really sends a wrong message. Okay. Where with the rate reduction, there's none of that involved. It's just giving them a lower rate, giving the consumer a lower payment, and having someone else pay that fee.
Now, is there a certain rate then that you currently have to be at in order to make benefit of the rate reduction?
I think that's the most popular, that's the most common myth. People are told, all these financial gurus always say, unless you can save 2%, it doesn't make sense changing your mortgage company. Right. And that's because with most loans, you have to basically calculate how much it costs to get the loan, your closing costs and settlement fees. Right. And you have to be able to recoup that in savings. But when there's no cost out of pocket and there's no money added into your loan and fees, there's nothing to recoup. Every savings is beneficial. Exactly. Because this is money that you can put back in your pocket in lieu of paying it to your bank in interest. Mm-hmm. And you've done over 15,000 of these
loans.
Over 15,000 of these transactions.
Amazing. Now, I hadn't heard of your company, Newport Shores Mortgage, or the NSM Rate Reduction Department until I started doing my research for the show, and I discovered that you are ranked 24th in the nation for doing these types of rate reductions.
Actually, it's doing all FHA loans.
Really?
We're actually ranked by, those are the latest rankings out of banks. We're small, but we do more loans than many banks. And the reason we don't publicize is because what we offer doesn't really appeal to the public. It's a certain, if we advertise, we would only really appeal to people who currently have FHA and VA loans, right, which weren't that popular in recent years. So mainly, and also our ability to help people is limited also. We really only help people on a first-come basis because of the demand for what we do now. Until recently, with the development of the Rate Guardian, we were really limited as to how many people we could take on a month. Now, we've been able to take on new clients, but that was definitely a hindrance, you know, our sheer time, and we had people waitlisted for a while. Amazing. Now, how did you discover these methods that you're using with your company? When we had the one client, the mom on maternity leave, we looked in HUD guidelines, and we found that there is a program called an FHA and a VA Streamline, which you may get mailers of. If you have a VA and FHA loan, you probably get tons of mail, people offering a Streamline, which says that you don't have to requalify for a loan. Okay. No credit check, no appraisal. But they don't say there's no cost involved. And they frequently advertise no closing costs, but they don't mention settlement fees. It's the same comparison I tell people if you go to the grocery store and you purchase something, or you go to a store and purchase and it says $9.99. you can go to the register and the total will be more because they add tax.
Right.
It's an assumption that when you do any type of loan, there's going to be settlement fees added because the attorneys obviously have to oversee it. Where with what we found a way to do through our rate reduction is to actually have those costs paid by a third party so that the consumer does not add this to their loan balance. They're not jeopardizing or using their equity to cover the cost of acquiring the new loan. They're getting the new loan basically for free.
Right.
Now, many people ask, why would a bank pay that?
Yeah.
Because obviously the banks make a ton of money on these loans.
Yes.
Oh, yeah. Most of your payment for the first 5 years goes to interest, so they make their money back.
Yeah.
We're concerned about the consumer.
Excellent. So what is the catch here? What if someone's sitting at home and watching and thinking there's got to be a catch here?
There's really no catch. I don't want to paint the picture like it's a magic wand we wave and
Right.
touch a person's mortgage coupon and it just lowers.
Yeah.
We do a lot behind the curtain to make the mortgage payments drop. We have to time it just right. I stress we put a lot of money into developing the tracking mechanisms to know when those windows of opportunity are there for the consumers.
Right.
Also, the person has to be current on their mortgage. We're not concerned about a person's past mortgage history.
Right.
But if a person's drastically delinquent on their mortgage, I mean, not just paying a little late, I mean, if they're months behind on their mortgage payment, we have other programs to help them get caught up.
Okay.
But a rate reduction is really geared for people who are paying their mortgage, are just looking for ways to maximize the money that they're paying out. They're either looking to lower their payment or they're looking to have more money go towards their principal by paying their loan off faster.
Right.
Those are the people that we can help. The only people I say we really aren't able to help are the people who are currently really delinquent. We have other programs for them.
We're really behind.
Yes.
And the easiest way to do that, of course, is to register through rateguardian.com, and your
Exactly.
website's up on the screen, or to call the 1-800 number.
Correct.
And get registered.
That's the key. They have to register because if no one watches your loan, you'll miss opportunities.
Exactly, because it's all about timing. So just if a person's watching, what happens when you call your bank and you ask for a rate reduction?
First of all, you'll probably reach a customer service agent that's clueless.
Yeah.
They're going to tell you about that there's no way you can do a loan without settlement fees being paid.
Right.
They're going to tell you that it's not cost effective to do or you have to requalify because they're not structured to do that.
No.
And their programs, the rate reduction is not popular because it's not the most profitable loan product. Most institutions would much rather do a loan where they load the client up with points
Of course.
than to do a loan where you're working on a razor thin margin.
Right.
So most of the time, the people in the banks are not going to be equipped to do it.
Right.
They're not going to know how to have the title fees, you know, not added to the balance, to not have the appraisal done. So a consumer may find it extra difficult. Also, they have to ask another question. If they're paying that company each month, what would be that company's incentive to let them know when the rates are better?
There is absolutely no
It's a
incentive.
conflict.
Yeah.
It's a conflict. We never take mortgage payments from clients monthly because we don't service the loans.
Yeah.
We're a non-biased party.
Wow. So what is the biggest myth then that exists currently about the FHA or VA mortgages out there that most people have in their mind?
That they're subsidized. People believe this is for the person who's having trouble paying their mortgage. I've yet to find a person who has too much money.
Right.
I've yet to find a person that enjoys paying interest.
Yeah.
Where I think because the program is free, people often think it's for people who are having some type of difficulty. Or people think if they're having difficulty, they won't qualify. It's just the opposite. It's all-inclusive.
Right.
Because the program was not made to benefit the consumer. It was really meant to protect HUD because they guarantee these loans. And they'd much rather see consumers with a lower mortgage payment than a higher payment because that's a higher default risk.
Excellent. I do have to take a break. Stay with us. Leading Experts. We'll be right back.